In the previous videos, price was going sideways. It's what's known as a ranging market, and therefore we were looking simply for bounces off areas of support and resistance. And for example, here in my mentor program at the weekend on the Sunday, when price had closed up here for the weekend, I said to my students, let's look at 15800 for a possible bounce back up. And this was not based solely on a simple bounce off 15800. What we also looked at was trend lines and channels. Now, because the current view is only showing a sideways view, the best way to have a look for trends and channels is to zoom out. And to do this, you go up to the minus figure here and look from further out. Suddenly, hopefully, it is now apparent to you that price has, since the beginning of March, been going in an upwards direction. And another way to check on this is what you look for is that each high is higher than the preceding high. And this is known as a higher high. So this high is higher than that high is higher than that high. This one was marginally, and then we've gone into this sideways range channel. Equally, you look for higher lows. So the low of this move was higher than this part of the move. The lower of this move was higher than this one, and so on and so forth. So what do we do? Well, we place trend lines. Off your top row, you take the diagonal trend line and you place it on your charts. Now, some people get stressed with this and get very confused and are not sure on what to do. It's one of the few occasions in life where you're actually looking, certainly in investment life, you're looking to follow the herd. You are trying to look and find areas on a chart where other people will be looking the same. And the best way to do this is to try to find areas where price touches the line as many times as possible. For example, if we went from down here, then we would have a problem because price has only touched once here. It's failed to hit it here. We've only got 1 point of contact. However, if we were to go, say, to here, or better here, we're then looking at 1, 2, 3, 4 points of contact. And spookily, where has price just bounced off at the moment? Similar on this trend line. Now, that is a trend line. That is giving you the direction, and those who trade solely with the trend will only be looking for buys as price comes back down to this area. If we add another line, an upper line, this then creates what's known as a channel. And once again, we are looking for price to touch as many times as possible. So what's happening here? Price is coming from this bottom area, coming up to touch the upper channel line, coming back down again, and coming back up again. So the secret, of course, is if we can catch the moves at the bottom, then we have a potential brilliant reward of around 170 pips, the size of this channel. Look at the middle figure, 175, ignore the last digit, the 7. This is a 5-digit decimal point platform. But 175 is the height of this channel. So if we can find an entry here, we only need to have our stop below the recent low, 20 or 30 pips away, and yet we are looking at a potential return of 170 to 200 pips. In other words, we are risking 1 for a potential reward of 6, 7, or even possibly 8. And that is the secret of making profitable trades at forex. You want to be getting an absolute minimum of 1 to 2 risk reward ratio. So for every dollar you risk, you are looking at a potential of 2 to win, and the more the better. From our earlier analysis, you can see that 15800 was important. And the reason why I told my students to look for 15800 for a long, and this trade worked almost to the pip, was because we had an intersection of 2 major support areas. There were a few other factors as well, but if you were trading simply off candlesticks and support and resistance, then that was a major area to take a trade, as was this area here. Similarly, price has just come back down again. It's touched to the pip the trend line and moved away again. I particularly like this one because I said this was an intersection of previous support horizontally and trend line. If we move this line up and look across to the left, you will find once again we have price has reacted in this area, perhaps a little higher, but around here, around 58.43, price has done it before, and therefore it was reasonable to presume that price is likely to do it again. This is why we look for support and resistance. This is why we look for as many instances of support and resistance as possible. The more indications we have that price will bounce off an area, then the more the chance of a profitable trade, and particularly when we are going with the trend. If this eventually breaks, which it will eventually, then what we will be doing, we will be looking for a break and a close below this area, then a pullback for a short. But we will cover that at a later date. This is the Euro USD, and I think you'll probably be able to see already that we had an upward move of higher highs going on before we started to move sideways, and higher lows. Once again, let's zoom out and have a look at the bigger picture. As you can see, hopefully now you can see that we are in a channel, and our lower trend line again wants to hit as many areas as possible. So let's have a look and trace our lines. Some people don't like going to the wicks of candles. To me, I don't care what we use. I just want to see as many touches as possible. Now here we have 1, 2, 3 touches. We have a slight spike through there, which I would prefer not to have. But the only other alternative is if we go to here perhaps, and then we're getting more spikes through, which are a bit wicked. So I'm going to go from this point here, because that to me then gives me a better sense of support. Once again, we are going to place an upper line so that we create a channel. And the best place to do that, I think, is somewhere around here. Let's have a look. Perhaps from the peak of that wick. Let's have a look what we get. We get a touch there, almost a touch, and a touch there. So once again, price is coming up. It is bouncing off this area and it is moving to the top of the range. And for this euro potential trade now, we would be looking across for potential support and resistance areas, and it would appear 32.75, the current spike down, was the place. Let's have a look. You can see here price has rejected, reacted, resistance, etc. And if we go further back, it's a little bit messy, but it's definitely been an area of interest. Let's zoom back in and have a look again. So once again, had we been able to catch trades from here or here or here, then we had the potential of a big move up. And once again, from this particular trade, this was at 3200, major psychological level, whole number again. And let's come down and have a look. Well, 31.95, shall we say? 31.90, support, 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 resistance, support, messy support, support. Big clue that price was likely to bounce there. Once again, you only needed to stop the other side of the trend line. And once again, you were looking for a potential big move up of around 150 pips. Hopefully from this, you can see the potential of trading trend lines, channels, support and resistance, and candles. The risk reward for this kind of trade can be exceptional. And in the second video, I show you why clearly the Euro USD has been going up in a channel, how, as to be expected, the Swissy was going down. I also show you a more difficult situation on the dollar yen, where price on the daily chart is going up, on the 4 hour is going down. And I show you some tips and tricks on how to deal with that.